to The Dirt on Organic Farming, a podcast from OATS, the Organic Agronomy Training Service. This season, we are answering all those burning questions we know you have about crop insurance for organic farmers. Yes, we know it's a podcast about crop insurance, but we're going to keep these episodes short, lively, and accessible. Heck, you might even enjoy listening. I'm Nate Powell-Palm.
And I'm Mallory Krieger.
And we're the hosts of The Dirt on Organic Farming.
In this episode, what is contract pricing?
In this episode, we are going to get into one of my favorite topics, literally favorite topics, contract pricing. For all farmers, but especially for organic farmers that rely on that premium, it's really important to have coverage that mirrors the value of a crop in the marketplace.
Most definitely. The ability to sell crops for a premium price is one of the major benefits of certified organic production. I imagine the RMA must account for this in their coverage.
Oh, they sure do. But markets are always changing, and it's possible that a crop is worth more in a given year than RMA estimates. And that's where contract pricing comes in. Contract pricing essentially provides an alternative to the RMA pricing for organic farmers. If the farmer can secure a contract for a better price than what's available to them through RMA, they can use that contract price instead. To learn more about contract pricing and why it's a helpful tool in organics, I reached out to Noah Wendt, a crop insurance agent who works with organic farmers.
My name is Noah Wendt. I'm with Wendt Crop Insurance Agency in Huxley, Iowa, which is halfway between Ames and Ankeny, Iowa, here in central Iowa. I started selling crop insurance in 2006, and in 2015, our farm operation decided to start to transition some of our land over to organic. With the advent of that, I was forced to learn how to sell organic crop insurance and all the ins and outs of it. So throughout the last 7 to 8 years, I've gained a deep understanding of everything that goes on with crop insurance and how it relates to organic farming.
Noah gave me an overview of how contract pricing works.
Contract pricing is an option that you put on your crop insurance policy, and it's for certified organic and transitional crop producers with written contracts from buyers to insure their crops based on their contracted price rather than the price that is set in the spring and in the fall by the USDA Risk Management Agency. Contract option can be added to crop insurance policy to help the producer better cover their crop.
All right, so when you present to RMA, you're essentially reporting your acreage. With that contract you have with a buyer, RMA will then reset the guarantee level to the price you secured in your sales contract.
Sounds pretty straightforward.
Well, there are a few things Noah mentioned that farmers have to keep in mind if they want to use contract pricing.
Well, first thing that they need to know is they need to choose the contract pricing option at sales closing date, which is March 15th. Second thing is just the mechanics of how it works. In all these coverage levels or options that there are for crop insurance, there's a spring price and a fall price for not only the non-organic but the organic crops. And the contract pricing will actually override those prices if you're getting a higher price that's on a written contract with an end user or a purchaser of your grain. One thing to note is that they do have a maximum price that you would be able to get to use for your guarantee under the contract pricing option. And generally that ranges in a ratio based upon the spring price for the different commodities. It would range anywhere from 1.25 of the spring price to 1.75.
Okay, so the deadline is the sales closing date, which is March 15th for most crops, but there's a price limit to keep in mind.
Exactly. To me, this seems like a pretty helpful tool for organic farmers, and Noah agreed.
I do view this as one of the main advantages. I would probably rank it in the top two just because of its uniqueness, and it can be applied to any crop in any situation to any farmer, and it truly reflects what's going on their farm operation.
Another question I had is whether it's more beneficial for a farmer to use contract pricing or just to increase their coverage level.
I think it's probably a combination, and it's probably something that you need to evaluate at sales closing time, just due to the subsidy amount being different at the 75, 80, 85% levels. There's probably going to be a sweet spot there that you end up hitting, whether you use the contract pricing, say at 80%, or you don't use contract pricing but take 85%. But I think that needs to be evaluated on a case by case basis at sales closing date. And I think you can do that easily enough just by figuring out what percentage higher your contract price is than what the projected price is, and adjusting your premium on that coverage level. And actually, a lot of the quoters that are out there that companies have, you can change the prices in there to reflect it also.
So it sounds like there are quite a few variables to weigh. This seems like something that would be good to take to your crop insurance agent to figure out which would be the better route based on your personal circumstances.
And it's going to be something we'll hear again and again this season. It is so important that you have a good, open line of communication with your crop insurance agent. And ideally, you're working with an agent who knows crop insurance for organic crops. Noah had some good advice on how to approach working with a crop insurance agent.
From an insurance standpoint, I would just encourage you to always be curious and always question your agent and always ask and push to get an answer, to know whether something's insurable or not, and just make sure you cover your bases really well that way. So being curious is about the best way that I can put it.
At Oats, we always want to learn how things are working on the ground, at the farm. So I called up farmer Herb Hasenkamp to hear about his experience.
Hi, my name is Herb Hasenkamp, and I am an organic producer here in Northeast Nebraska. I'm actually the fifth generation of our family farm, and we've been farming organically since 1994. And so we're actually about to put our 29th crop in the field here shortly. And primarily, we grow corn, soybeans, and alfalfa. We do have a small cow-calf herd as well, but currently they are not certified organic.
I asked Herb how he thinks about contract pricing.
So to me, contract pricing, one of the nice things about it, it just allows me to replace whatever the current insurance price is with the price that the end user is willing to pay me for the crop. Just to create that level of a baseline where we know we'll receive X amount on whether it's corn, soybeans, or some other crop.
I'm curious if Herb provided any examples of how he's used contract pricing on his farm.
Well, I'm happy to say we can satiate that curiosity because he did. He did indeed.
So a great example about contract pricing on our farm last year was that if you looked at our soybean crop in particular, on our farm, we had a 45 bushel guarantee. And so at the current pricing, in that fee, in the premium cost was $27.44 per acre. We had a guarantee of $1,233 per acre. But when we applied our contract pricing, and that was at $35 per bushel is the contract we were able to sign with an end user, that actually increased our net revenue per acre, or our guarantee per acre, up to $1,575 an acre. So it was actually a $340 per acre guarantee increase that we wouldn't have had we not been able to use contract pricing in our crop insurance.
Wow, an extra $340 an acre is not small beans. It sounds like this could really make a difference for organic farmers.
I know personally, it's really reassuring to know that as an organic farmer, we have options to improve our coverage and have added security for our crops. It's definitely no secret that any farmer really only has so much control over their outcomes. And for Herb, contract pricing has been important for his peace of mind.
We have used contract pricing numbers in our crop insurance the last few years, in both corn and soybeans, in fact. And that does it does, again, just kind of gives you that level of security that that even if we get a 2021 or a 2022 like we did last season where it's been awful dry, we collected on insurance because we did not hit our guaranteed yields just due to the drought. It's great knowing that we have a secured price established. And, sometimes a certain area, a certain geography will have a drought, but it doesn't affect a large part of the growing area. And so, others might have fantastic yields and you'll see that commodity price drop. And then you're stuck in a very bad situation where, number one, you don't have crop to sell. And number two, the commodity price itself is dropping because everybody else had a great crop and there's plenty of supply out there. Our prices will stay where we contracted them at. And to me, contract pricing really allows me to make sure, or to allow me to sleep good at night, if you will, to know that, now I've got a set price. It's a price I know I can be profitable, but I can just worry about production now and doing the best job I possibly can there.
This has been The Dirt on Organic Farming, a podcast by the Organic Agronomy Training Service. Oats provides training to agronomists, advisors, and crop consultants so that farmers will have better access to reliable, science-based advice for their unique farm operation. Special thanks in this episode goes to Noah Wendt and Herb Hasenkamp. This episode was produced by Michaela Elias. For more information, go to www.organicagronomy.org. Oats is a programmatically independent consortium that is fiscally sponsored by the Organic Trade Association. Oats is supported in part with funding from OTA's membership companies. Season 2 of The Dirt on Organic Farming is made possible by a funding partnership with USDA Risk Management Agency under award number RMA 22CPT00123393. I'm Mallory Krieger.
And I'm Nate Powell-Palm.
Till next time, thanks for listening.